Hey everyone, and welcome back. Today we're going to be taking a deep dive into something that's super important for building wealth, reinvesting profits.
Yeah, it might not sound as exciting as, some flashy investment strategy, but trust me, this is where the real magic happens.
Okay, so our listeners sent us some really cool sources that illustrate just how powerful this concept can be. One example um, really stood out. Turning $10,000 into almost $100,000 over 30 years just by reinvesting profits consistently.
Yeah, compounding, right. That's the key here. It's like a snowball effect.
Okay, so let's break this down for our listeners.
Yeah.
What exactly is compounding and why is reinvestment so crucial to the process?
So imagine this. You invest $100 and you earn $10 in interest. Now, if you spend that 10 bucks, you're essentially back where you started. But if you reinvest it, the next time you earn interest, it's not just on that initial 100. It's on 110.
You're earning interest on your interest.
Exactly. And that's what creates this exponential growth curve over time.
We even saw this quote from Einstein in one of the sources. He called compound interest the eighth wonder of the world.
He wasn't kidding. And the really cool thing is that this principle can be applied in so many different ways. Our sources cover a bunch of them, like investing in the stock market, building a real estate portfolio, even growing a small business.
Okay, let's start with the stock market. I think a lot of our listeners are familiar with stocks but might not fully grasp how reinvestment fits into the picture.
Sure, so it's actually the perfect example to illustrate compounding. Let's use that $10,000 example you mentioned. Imagine investing that in a diversified stock portfolio, let's say with an average annual return of 8%.
So you end up with an extra $800 in profit after the first year. But instead of spending it, you reinvest it, right?
Right, now you're starting year two with $10,800. And because you're earning interest on a larger amount, your return that year is going to be even higher. And this keeps happening year after year. The snowball just keeps growing.
And according to the source material, after 30 years of this consistent reinvestment, that initial 10,000 would have grown to nearly 100,000.
Wow.
Yeah, and that's how powerful time and consistency are when it comes to compounding. Of course, it's important to remember that stock market returns are never guaranteed. Some years are better than others, and there's always the risk of losing money, too.
That's where diversification comes in, right? We hear that term a lot, but I think it's worth explaining why it's so important.
You got it. Diversification just means spreading your investments across different types of assets to reduce your risk. Like, think about it like this. If you put all your eggs in one basket and that basket falls, well, you lose everything. But if you have multiple baskets, even if one of them takes a hit, the others are still there to cushion the blow.
So in the stock market, that might mean investing in different sectors, companies of varying sizes, maybe even international markets.
Right. It's about building a balanced portfolio that aligns with your risk tolerance and your long-term goals. Okay, so we've talked about stocks. What about something a little more tangible, like real estate? We got a source from our listener that talks about building wealth through rental properties, and I'm really curious to get your thoughts on this.
Yeah, real estate is another great way to use the principle of reinvestment. But it does come with its own set of things to consider. So let's say you buy a rental property that generates, let's say, $5,000 in net cash flow each year.
And that's after paying the mortgage, property management fees, and setting aside money for repairs.
Yeah, so instead of spending up that $5,000, you reinvest it. You can use it to pay down your mortgage faster, which would make your future cash flow even bigger, or you could save it to buy another rental property.
So you're building a portfolio of income-generating assets, and each one helps fuel the growth of the next one.
Exactly. And another cool thing about real estate is the concept of leverage. You're basically using borrowed money, the mortgage, to amplify your returns. So you're not just relying on your own capital to grow your wealth.
Of course, leverage can also magnify risk, especially if the market takes a downturn. And just like with any investment, it's super important to do your research and be prepared for the unexpected.
For sure. Real estate is definitely not a passive investment. It takes careful planning. You got to understand market trends and be ready for things like vacancies or unexpected repairs.
But if you're willing to put in the work, it can be a really great way to build wealth over time.
Yeah, no doubt. And the last example we have on our source material is about growing a small business. This is something that a lot of people maybe don't think about, especially when they're first starting out and, they're excited to see some profit.
Yeah, I get that. You work so hard to get that business off the ground.
Yeah.
It's tempting to just, reward yourself.
Absolutely. But reinvesting at least a portion of those earnings early on can make a huge difference down the line. So let's say your business makes a $20,000 profit in the first year. You could pocket all of that, and that's totally fine. But putting some of that money back into the business can really fuel its growth.
Okay, so how would that actually work? I'm guessing it depends on what kind of business you're running.
Yeah, for sure. It could mean upgrading equipment to boost your efficiency, or investing in marketing to reach more customers, maybe expanding your product line, or even hiring some extra help.
So you're strategically reinvesting in different areas of your business to keep it growing and moving forward.
Right. And the source material actually had this really interesting example. A business owner reinvested half of their initial profit, and guess what? The next year, their profits doubled.
Wow.
Oh,
So it's almost like planting seeds to grow a whole business ecosystem.
I love that analogy. Reinvestment, no matter what avenue you're exploring, is all about nurturing growth, not just financially, but in terms of the skills and resources you need to be successful.
We've talked about three really cool ways to use reinvestment: stocks, real estate, and small businesses. And they all show how powerful it can be to build wealth. But I have to admit, it's got to be hard to resist that urge to just spend the money you make, especially when you first start seeing profits come in. It's all about delayed gratification, isn't it?
You hit it right on the head. That's a really important aspect of reinvestment, and that's something that we need to dig into a bit more. How to make reinvestment a sustainable part of your financial plan. It's about finding that sweet spot between enjoying today and setting yourself up for an awesome future.
And that's the perfect place to leave things for now. We'll be back in just a bit to talk about some of the challenges and strategies that can help you make reinvestment a consistent part of your journey to financial success.
Yeah, that idea of delayed gratification is really key when we're talking about reinvestment. It's about kind of shifting your mindset, moving away from those instant rewards and thinking more about the long-term benefits.
It's like that constant battle in our brains, right? Between like, I deserve a treat right now, and future me will thank me for this. And sometimes that treat wins out.
Well, for sure. I've been there plenty of times. But one thing that I found really helpful is connecting your reinvestment strategy to some very specific financial goals. Like if you have a clear picture in your mind of what you're working towards, is it retiring early, buying your dream house, maybe starting that business you've always wanted, whatever it is, having that goal makes it easier to prioritize those future goals over spending money today.
Yeah, it's like if you're just vaguely telling yourself, save more money, it's easy to slip up. But if you're picturing yourself like, I don't know, relaxing on a beach in Bali because you made some smart investments, that's way more motivating.
Exactly. Having those clear goals in mind can help you figure out the best approach for reinvestment, too. So, for example, someone who's saving for retirement might focus on like a diversified portfolio of index funds, maybe some dividend-paying stocks. They're aiming for that slow and steady growth over decades.
Whereas someone who's trying to build a business might put those profits right back into marketing, developing new products, growing their team. Really prioritize that rapid growth over taking a big paycheck right away.
Exactly. Your strategy should be tailored to your specific situation and goals. There's no magic formula that works for everyone.
And speaking of tailoring strategies, I think it's worth mentioning diversification again. We talked about it with stocks, but the sources we're looking at really emphasize how important it is no matter what you're investing in.
Oh, yeah, absolutely. Stocks, real estate, even your own business. Spreading out your risk is super important. Like with the real estate example, you might own multiple rental properties, which is awesome. But what if they're all in one city? And that city hits an economic rough patch.
Oof. Yeah, that would definitely hurt. So maybe you diversify by buying properties in a few different cities. Maybe even mix things up with different types of real estate like residential and commercial. You could even think about doing some short-term rentals.
Exactly. And diversification goes beyond just where you put your money. It's also about having diverse skills and income streams. Like, could you start a side hustle? Maybe invest in some education to boost your earning potential. Even explore passive income streams like royalties or something.
So it's not just about diversifying your investments. It's about diversifying your whole approach to building wealth.
That's a great way to put it. It's all about creating that financial security, making sure you're not relying on just one thing to make everything work.
Now, there's another point that came up in the sources that I thought was really interesting. It's about timing when it comes to reinvestment. It's not always about like reinvesting every single dollar every single time, is it?
No, you're right. There are definitely times when it might make sense to hold back a bit. especially if the market is being really unpredictable or certain assets are looking a bit overvalued.
Yeah, like if there's a stock market bubble or if real estate prices are just through the roof, it might be smarter to wait a little bit for things to settle down before you go all in.
Exactly. You could maybe park your profits in something a little more stable, like a high yield savings account or some treasury bonds. They might not grow as fast as stocks or real estate, but they offer more stability and you can access your money easier if you need it.
So it's like taking a strategic time out.
Yeah.
Let the market do its thing and then come back when things have calmed down a bit.
Right. You got to be able to adapt. Your reinvestment strategy should change based on what's happening in the market.
This is all making a lot of sense. But I can also see how it could be a bit overwhelming to put into practice. The good news is our source material mentions some specific tools and techniques that can make reinvestment a little easier and maybe even automate some of it. Can you tell us more about that?
Yeah, for sure. So for those who are into investing in stocks long term, a really popular option is something called a dividend reinvestment plan. We usually call it a DRI.
I've definitely heard of DARPs, but to be honest, I'm not 100% sure how they work.
Well, it's actually pretty straightforward. So let's
Yep.
say you own shares in a company and that company pays dividends, that little share of the company's profit that they give to shareholders. What a DRP does is it automatically takes those dividends and uses them to buy more shares of that same company.
So it's like your dividends are going out there and buying you more little money-making machines.
That's a great way to think about it. And the best part is that it usually happens without any brokerage fees. So over time, that can really add up.
So you're basically compounding your gains within your stock portfolio. You steadily increase how much of the company you own, and that means bigger dividend payouts in the future. Sounds pretty appealing for anyone who's thinking long term.
Yeah, it's a great option if you want to set it and forget it. Just let that compounding magic work in the background.
Okay, what about business owners? What are some of the go-to methods they use to reinvest their profits?
One common way is through capital expenditures. That's basically when you spend money on assets that will help your business become more productive and profitable.
So things like equipment, technology, infrastructure, even expanding their physical space if they need to.
Right, like think about Amazon. They spent years reinvesting almost all of their profits to build up that huge logistics network, develop new technology, and expand into all these different markets.
That's a great example of how powerful it can be to play the long game.
It really is. And, those reinvestments might have meant smaller profits in the short term, but it's what allowed Amazon to become the giant it is today.
It shows that reinvestment isn't just about stacking up cash. It's about building something bigger, creating something that has real value over the long term.
I completely agree. It's about investing in that future, your personal financial future, the future of your business, maybe even the future of your community.
Okay, so we've covered some awesome strategies and tools, but we can't ignore the risks involved. Reinvesting profits isn't always smooth sailing, is it?
No, definitely not. Just like any financial decision, you've got to approach reinvestment with a healthy dose of caution. You got to know what the risks are. If you just blindly follow the latest trends or invest in something you don't really understand, you could end up making some expensive mistakes.
So doing your homework is crucial, but what does that look like in practice?
It means researching that investment thoroughly, understanding how the market works, considering the potential downsides, and being realistic about the fact that you could lose money. Sometimes it's worth getting some professional advice, especially if it's a complex investment. Talking to a financial advisor, an accountant, or an expert in that industry can be super helpful.
So it's not just about getting excited about the potential profits. You got to look at the risks head on and have a plan for different scenarios.
Exactly. You got to make those decisions based on facts and logic, not just your emotions. And one way to minimize those risks is to stick with strategies that have a solid track record.
Do you have any examples of those?
Yeah, so in real estate, value-add projects have historically been a pretty reliable way to build wealth. That's where you buy a property that needs some work, you fix it up, and then you rent it out or sell it for a higher price.
So you're literally adding value to the property and that translates to bigger profits. Makes sense.
Right. And for the stock market, investing in index funds or blue chip stocks can be a good option if you want something a bit more stable with long-term growth potential. Those are usually large, well-established companies that have a history of performing well.
So you're basically going for the tried and true methods instead of chasing the latest get-rich-quick scheme.
Exactly. It's all about the long game. Remember, slow and steady wins the race when it comes to building real wealth.
Okay, we've covered a ton of information today. from the basics of compounding, all these different ways you can reinvest your profits in stocks, real estate, even your own business. And what's really clear is that reinvesting isn't just about making more money. It's about building a more secure future, a future where you have more options and opportunities.
It's about taking control of your finances and building something that can last for generations. Financial stability and freedom, that's the legacy you're creating.
So what are some practical things our listeners can do to start putting all this wisdom into action? Where do we even begin?
Well, the first step is really understanding your current financial situation. You got to know where your money is coming from and where it's going. So track your income and expenses carefully.
Okay, so no more shoving receipts in a drawer and hoping for the best come tax time, right?
Yeah, exactly. We're in the digital age now. There are so many great apps and software programs out there that can help you track your income and expenses, budgeting apps, accounting software. It can actually make this whole process a lot less painful than you might think.
Okay, so let's say we've got a good handle on our cash flow now. Where does the actual reinvesting happen? Do we just pick a random investment and throw some money at it?
Not exactly. I'm a big fan of setting up what I like to call a dedicated reinvestment fund. It's like a separate savings account, but specifically for reinvesting.
So it's like our own personal little money growing machine. We put some of our earnings in there and let it work its magic.
I like that. Yeah, think of it as your money seed bank. And to make this whole process super easy, you can set up automatic transfers to this fund. So every time you get paid, boom, a portion of that goes straight into your reinvestment account. You don't even have to think about it.
Automation is a beautiful thing. It takes away that whole should I or shouldn't I debate that can happen every time you get paid. And it helps you build that consistency, which is key when it comes to reinvestment.
Couldn't agree more. Consistency is huge, and so is patience. Honestly, those are the two most important ingredients for success in this game.
The dynamic duo of wealth building.
Exactly. Building wealth through reinvestment, it's not about getting rich quickly. It's a long game. It's a marathon. You're going to encounter some bumps along the way. The market might dip. The economy might slow down. There might even be times when you start to doubt yourself and your strategy. But the most important thing is to just stick with it. Stay the course. Don't let those short-term ups and downs throw you off track.
It's like we were talking about earlier, that snowball effect. If you pull your money out every time the market dips, you're never going to let that snowball build momentum.
Exactly. The real magic happens when you're consistent over the long haul. That's how you harness the true power of compounding. You gotta let time do its thing.
We've covered so much ground today, what compounding is, how to use it in different ways, like with stocks, real estate, and even your own business. And I think the biggest takeaway is that reinvesting profits isn't just about accumulating more wealth. It's about creating a more secure future for yourself, a future where you have more choices and more opportunities.
It's about taking charge of your financial future, building something that can benefit you and your family for years to come. That sense of security and freedom, it's something you can create.
It's amazing to think what's possible when you embrace the power of compounding and make reinvestment a regular part of your life.
So I want to leave our listeners with this thought. Imagine where you could be financially in 5 years, 10 years, or even 30 years if you consistently reinvest even a small portion of what you earn. Think about what that financial freedom would mean for you. What doors would it open? Would you travel the world? Would you finally pursue those passions you've been putting off? Would you be able to give back to your community in a bigger way? The possibilities are truly endless.
It's such a powerful vision, and it all starts with taking that first step. Maybe it's setting up your reinvestment fund. Maybe it's automating those transfers. Whatever it is, get that snowball rolling and watch it grow.
And remember, the more you learn about these kinds of financial strategies, the more power you have to shape your own financial future. Knowledge is key.
So keep exploring, keep learning, and keep those financial snowballs rolling. Until next time, happy investing, everyone.